Welcome to Tradier's The Trader's Edge. I am Jim Iuorio. That's Bobby Iuocio. Before I get to anything else, and it's not about the shirt, but it's going to be about the shirt. Is that when is this government shutdown thing supposed to happen? Isn't that any day now or no?
Yeah, it's any day now. It's supposed to happen.
Okay, good.
But as of today, they're furloughing IRS workers, so I'm very happy.
I heard you read that headline. Half of the I see. I don't want to behind the scenes. I can bash the IRS, but I don't want to do it in public. I don't want to get
I'm not bashing them. I'm just happy they're getting furloughed. I don't think there's anything wrong
if they get a good check, that's nice too. We are coming to you live, as you know, a lot of audience participation. I am wearing a traditional standard Italian garb, which is a dark shirt. For some God knows why reason, Bobby has a sunny, bright baby blue shirt on to reflect his bright and sunny demeanor. Bobby, I'm so glad you've turned over this new leaf.
Do you know how uncomfortable this is? I mean, look how stupid this looks. Like if I button this and put a tie on.
And some people who are just listening, when Bobby has a dress shirt on, it honestly looks like an animal in a cage or something. It looks like he's like just wants out of it.
It's like if I had a tie on.
Yeah.
How weird would that look?
And again, it can be the February, and if I have a jacket, tie, and a dress shirt on, I'm just hot all the time. It's like those things are wrestling me, and I just hate it. I hate wearing it. I do it sometimes, and I put on a suit sometimes, and always my thesis is, what would Sinatra wear? And that's good. It works for me. Anyway, markets keep grinding higher. We're gonna get our guest on in 1 second.
I'm gonna go change this.
Oh, you go change the shirt. I'll get the guest on. By the way, you guys make fun of Bobby and I. You've seen us for years and years. Sometimes you think we're full of shit, but you cannot deny the fact that we get good guests. This is one of our favorite. Let's bring on Will DeCotiis. Well, last time, look at Bobby in the Italian V-neck, the traditional garb,
Italian garb,
American Italian man, right? Well, last time we talked, weren't you clean cut? Didn't you have short, clean cut hair, and you were closely crop shaved? What happened?
Yeah, just life in AI, man. You can lose all the formalities.
Okay, you're not depressed or anything, though, right?
No.
Okay, happy. We'd be here to help. Okay, before we go, I read a little bit about Spectacles. It's a new venture. Is that fair to call it a new venture?
Yeah, I think so. Yeah.
It seems pretty cool to me. Can you describe to us what it is?
Sure. Yeah, we're a legal AI company, and so we service legal and business folks who are reading contracts a lot, usually complex contracts, and we use AI to make that process easier. So to assist your workflow and make contracts easier to read.
So who is your target audience? Just legal firms or people?
Legal firms. Yep. We like to serve, we can serve any size. We like to serve like mid-market, so regional firms, and business professionals, so in-house teams.
So you're not, Will, I'm sorry, Jimmy. You're not talking about, Jimmy and I get a lot of contracts, and it's usually on me to read them and check them out and all that, for doing content and some of the other speaking things that we do independent of our real jobs. And some of them are long. Like I'm throwing my wife a birthday party down here, and I got the contract for the place I'm throwing it at. And I just copied and pasted and threw it into Grok and said, find me any problems in here. And it found me a couple, right? You're not talking to people like me, right? You're talking to things maybe we would do in our speaking schedules, but not like a birthday party contract or anything like that.
Yeah, we could help you out, but we usually work with folks who are doing contracts that are a little bit more complicated. Usually,
you're not saying you can help me out because we know you. You're saying that if somebody called.
No, I would help you just because we know you, but we have the capacity to help you as well. Yeah.
Yeah, that's not your target.
But our target usually is folks who are, working with business contracts.
Very cool. So I've had this thesis about AI, and you obviously see AI from the inside, is that I believe AI is 2 years further along than we think it is. Let me make the point before you judge that point, is that it is one thing for B of A to boast about letting 5,000 people go because they're letting AI have more role in their HR department. But it's another thing, small independent law firms, small independent accounting firms. A lot of these people are using AI a tremendous amount. They don't like to talk about it that much though, because they're afraid it would make their job seem redundant. Do you believe this is an accurate thesis?
Yes and no. I think over the long term, AI is going to drive a lot of efficiencies for sure.
Yep.
What I would say about it is that I think a lot of the expected efficiencies have been front loaded. So people expect it to come in a year or two. And I think it will take longer for people to actually get a good workflow that really serves them and really makes their life efficient on like an ongoing basis. So, if you think about how much you use Grok or how much you use, just a general frontier model, it's probably not all day. It's probably like 20, 30 minutes a day. And so I think over time that'll expand out of how much time you actually spend using these tools. And I think perhaps more importantly, I think it'll integrate more into, everyday life. These AI generally it's a new mode of thinking. And so if you think of how the world works now, like Google or the like, the world really runs on the internet and it runs on, page linking. So ranking, linking. This is a new, it's a new way of thinking where you're using tokens instead and predicting what people might want or people might use or need in their day to day. And so, it hasn't been built out yet and it's in the process of being built out. But there's a whole world where, it's a new operating system, perhaps, and a way the world works in the digital world. So, I think folks are perhaps a little bit over their skis. I think folks, as people do, when you see something get adopted very quickly and you see a rapid adoption rate, they have a tendency to project that out to just whatever that adoption rate is and just keep, pointing it towards the sky. And I think there's a lot more work to be done on both the technical front. And I think, I'm happy to talk about the investment stuff too.
Well, yeah. So I do want to talk about the investment part, definitely. But I want to ask you just a simple, stupid question about AI. And I know this is a stupid question because I was too embarrassed to ask it of Tony Nash. Are these models actually learning? So they're called large language models, right? And I don't know how like literal to take that. I remember asking one of them, and I couldn't tell you which one, if it could put together a complex stock screener for me. And it said, it's a large language model. I can't do that. It doesn't have access to the data, et cetera. So 2 questions, or sort of 2-part. How much are these things actually learning from the mistakes they make? Because I am one of the people, I know Jim is too, that will argue with these freaking things, right? It's like, no, you're wrong about that. And then it comes back, thanks for the correction, right?
Yeah.
Will it not be wrong on that again? And then the second part of it is how far away are they from doing the kind of things that would actually save me a lot of time?
Gotcha. Yeah. So, it's a good question. So, I'll break it down to a couple parts. And so the first thing I would say is that a large language model, it's basically designed to be pre-trained. And so there's a certain amount of information that goes into it during its training stage. And then once it gets to the consumer, so when you guys are using it, it's now kind of in what you would think of as like the inference stage. So it's making inferences for you based on your prompts and the like. And so, I want to speak to, other people's business model, but we speak generally of the frontier models. And so, the main models, the big tech folks, they take in the prompts and the responses, and they use that to reinforce or refine future prompts. And so you can expect, I think, them to improve with time. I think right now in the industry, the main thought of how to get these things better has just been scaling. And so the idea has just been, let's just keep feeding it more and more data. And so, if you've been following the market, you know, they've just gotten bigger. And so they started out at a certain size and they just keep adding parameters, and that gives the impression of getting smarter because it's just getting like more training. I think you could argue kind of conceptually if that's actually being smart or what it means to be smart. But, they're definitely getting bigger. I would personally argue that I think, the best model is probably the one that's the smallest, uses the least energy while still giving like accurate answers is probably the best way to describe it. So perhaps the market is thinking about that in a different way, but definitely like initially, as these new products are just reaching the market, the general schema seems to have been just scale them as big as possible, give them as much data as possible. And then that presents some, some interesting issues, in terms of what kind of data it's taking in, what kind of structure that data comes in. It becomes a very interesting technical question.
Bobby, I have a question for you, actually.
Yeah.
So this week, and you guys, I know most of you guys are watching it live, but if you're not watching it live when you do, this week was when AMD, OpenAI talked about something, shook hands, and then AMD gained $40 in value or something ridiculous like that. And you guys, most of you guys know I was long it through. I had sold calls close to the market and bought like almost twice as many calls above the market. So it turned out to be one of the best trades I've had all year, and I've covered most of it now. But to me, this smacks of absolute mania. For the same day that AMD was going through the roof, with the same day gold was shooting higher, to me, something weird's going on that I don't like. It reminds me of when the tech bubble and again, being able to say that a bubble is inflating right now is far, far different than say how we're going to take advantage of it and play it. But Bobby, am I wrong to be thinking all this shit is crazy now?
No, I don't think you're wrong. I mean, Oracle sustained most of its gain. AMD is actually adding to its gain as we speak. Oracle didn't initially do that. I think what we're looking at is the main difference to me between now and say the dot-com craze, right? Is that the core companies in this bubble, for lack of a better word, are making money, and they're making a lot of it.
Yeah.
So it seems to me to be, there's a net on this one, in my view. Right now, I do have questions about this sort of circular relationship, and maybe we can go to Will with this, but the circular relationship with this leasing of chips, like Tesla just announced that they were going to raise money to lease chips, right? I don't know how long the leases were. I don't have the technological background to see if that's a good move or a bad move, but that reminds me a little bit of Cisco, back in the day with the routers, right? And it took a long time to recover from that. But having said that, again, the core companies are very wealthy, which wasn't the case in 2000. So I think we're setting up based on a number of things for a correction, but I don't think it's going to be a rare market. I think it's going to be a correction.
Will?
Yep. Yeah, I guess I would mention two things about that. So I would start by kind of splitting that analysis a little bit and into basically companies that are basically being vendor financed or just investment financed or VC financed, and companies that are funding out of cash flow. And the reason I would do that really is because if you think of some of these big tech companies, they're spending a lot on CapEx. Some of them are spending like half of their operating cash flow on capital expenditures for this, on AI specifically. And you could argue like it's too much, like it's too much money and they're overspending. But if you're in the board seat there and you're saying to yourself, well, if I get this wrong or I don't integrate AI effectively or fast enough, it's an existential risk to my company because, kind of going back to the point, like if you're Google and you're relying on page links and ranking algorithms and now the world is using AI, and you're not fast enough, you can make yourself obsolete. And so in some regard, the capital expenditure spending, it makes sense if you're thinking about yourself from like the position of the board or position of a CEO. You say to yourself, like, if I overspend, that's better than if I miss it completely and my company ends up dead or obsolete or slow. Conversely, you do have this very circular relationships that are showing up where, you have like vendor financing, because to run these LLMs, there is extremely energy.
What's an LLM? Tell me what's an LLM?
Large language models.
Got it. Sorry, I should have known that. Sorry. Moving right along. Cut that part out when we go live. Okay.
Yeah. So, it's computationally expensive. And so you look at some of these companies and say, they're making $4 billion in revenue, but it costs $8 billion in operating expense to run it. And so, they need constant reinvestment. And there's demand. So,
you're talking about OpenAI when you say that, right?
I am. Yeah. So I'm saying like,
no, because we don't have to be secret. Right. Yeah. Okay. Go. Yeah.
Not to single them out, but just generally speaking, they have demand, they have, massive growth. And so you want to service your customers. You don't want to give up market share. But at the same token, you're not really making money in the sense that you're the way like a big tech company is like a Microsoft or someone who can, or Google even, who can afford to just keep spending half of their operating cash flow and just keep doing that, perpetually if they need to. Yep. I was sure if Bobby had his hand raised.
Yeah. So what I was going to sort of follow up with is you mentioned Google and what's their AI called? Gemini, I think.
Gemini.
Yeah. Do they have an advantage because they had such an advantage in search, or does that not come into play? Plus that they're the CIA, according to Jim.
Yes, they are.
But do they have an advantage based on that? Any of those things in their Gemini AI? I've never used it because to me, I'm like a lot of people. I have used AI for simple contracts or real estate easement that I had to write up with a neighbor who I'm friendly with, so I wasn't worried about it. What I just talked to you about, this birthday party contract, I just asked Grok to find me problems within the contract. It actually did, by the way, for the sake of the conversation. It realized that the person who wrote up the contract had added a tip to the room rental, a 23% tip to the room rental. So that money wasn't going to anyone but their office. So as somebody who just mainly, I don't want to say that, as somebody who also uses AI as Google search now, hey, find me a good happy hour. Does Google have an advantage with Gemini over some of the other programs because they were so big in search?
Yeah, I think so. Different people disagree on that. ChatGPT, obviously, they jumped out in front, just like first mover advantage. And I have seen some statistics where Gemini and others are starting to eat into that market share a bit. I think it's logical that would be the case. And I think that because I don't really think ultimately the LLMs exist completely by themselves. I think they exist in a larger architecture of technology and algorithms and data access and memory. And so from that perspective, some companies that are legacy companies actually have an advantage in the sense they already have data, they already have structured data, and these LLMs are hungry for it. And so if you already have, think of like Google, they have years of personal data and they have ranking algorithms and the like. I think that it does give you an advantage. So does just like brand recognition of being someone being comfortable with using Google, like you're used to searching Google. And if the switching cost between ChatGPT and Gemini is zero, you might just go with the brand
So tell me this. So for me, I look at, so also does Twitter and Grok have a similar advantage too? Because they have access to all the conversations on Twitter that are happening globally all the time. Do you consider that a great advantage as well?
I think so. I think the LLMs thrive on data. They need data. The more data, basically, the better, the more accurate they get. And so, at least to some extent, unless it's like domain specific, in which case you need domain specific data or perhaps structured data for that domain. So in like legal, in medicine and the like. But yeah, I think the reason why like Grok would integrate with Twitter, like why would you even do that? The reason is data. It's getting user data. And then an interesting question becomes, if people start relying on, you start asking Grok questions, you get more and more comfortable relying on its outputs. And perhaps you start putting that out into Twitter. You can kind of get into this kind of convergence loop where you say like, well, is this data human generated anymore? Can I rely upon it? Right now, a lot of the data in the world is human based. Until now, it was basically all human based, more or less. So you kind of get into that question of,
yeah. Sure. So my follow-up question is this: is that Google has become my single biggest stock position. I have bigger positions in metals and Bitcoin and things like that, but Google's my single biggest. Now, the reason, again, I always joke about I own it because I believe it's the CIA. Let's put that aside for a second, which I do. It's not a joke. I believe that Google is the CIA. Call me wrong, but I've made a good deal of money out of that thesis. So, but now my current thesis, putting that aside, is that because I do believe the CIA has other options if they want to collect data on us. They don't need to be part of Google. But for me, it's quantum computing, which is something that is probably in the far distance, but AI in the shorter term, Waymo, full self-driving on the short term too. For these are the reasons that I still fundamentally like Google. Do you think that's a good investment thesis currently?
Yeah, I think on the larger, like when I'm looking at it and I look at the larger industry of AI, the way I think of it is, there's kind of two things going on. There's the capital expenditures that are happening. And so the capital expenditures themselves have been like such a contributor to GDP that it basically, by some accounts, makes up most of the growth in America. And so, or in the US. And so you kind of say to yourself, without AI, is the US GDP growing? And the answer actually, I think, might be no.
I think it's no. So from that perspective, I think you're right.
Yeah. So from that perspective, everyone's concentrated into a few relatively few big tech company names, and you kind of understand why. You kind of say to yourself, well, those are the only things that are growing. And so, from an investment thesis perspective, that is somewhat risky. You think to yourself, like, I'm super concentrated in with everyone else, and we're all just kind of, chasing that growth, but nothing else is growing, and perhaps the market or the economy just generally is a little more fragile than we might think. So
it's a great point. It's a great point, Will. Yeah.
Two things. I want to go to some of the comments. First of all, I want to say good afternoon to Remo, because Remo said good afternoon to us. Remo's always here. Will, you should follow him. He's a good guy. Then Tim has a question that I have a short answer to, but I don't want to answer it. I want to give it to Will. Tim says, how does OpenAI honor commitments of hundreds of billions with negative cash flow? And by the way, Jim and I know Tim personally, and I was expecting a question of this sort from him because he hates all this kind of stuff. But go ahead.
Yeah, so I mean, I think the answer is they're projecting out that it's going to take them like 6 years to reach positive cash flow is the way they're thinking of it. And so the venture capital world is kind of like that in the sense that what you're doing effectively, that trade of VC is we're going to spend it now and we're going to spend what we expect our projected future revenue to be for the sake of getting market share so that we're stable and we own that category. I think tends to be the thought process amongst like a certain group in Silicon Valley and San Francisco generally. And so I think that's probably the way they're thinking of it. I think they're probably thinking of like, we have demand, we have growth, we have brand name recognition. Might as well spend it now, spend it. And if, we overcommit or people overcommit, maybe you lose money, but our job is to continue to innovate as fast as possible, because if we own that category, or at least are a major player in that category, we'll own it for long enough where we can just make it back or spend it. Pay
Can I answer it? What I think the answer is to my uneducated answer, and I want you to tell me too, because I think, Tim, is that their gamble here is that there is VC money, there is funding, it is out there, it is waiting. The people are begging them to throw money at them. You can also see it when AMD and they just talked about something, and all of a sudden AMD went through the roof. Gold going through the roof, which is a reflection of the appetite for gold, but also the reflection of excess liquidity in the system looking to find a home. That's the play right now. The gamble by them is that there is so much liquidity that people want to throw our way. Correct, Will?
Yeah, I mean, I think of it more in terms of like, I think folks think AI is kind of the industry to rule all industries. And so I think they think of it as being embedded or sitting above every other industry that exists. So it'll be in media, it'll be in legal, it'll be in medicine. It's going to be everywhere. And so I think
people think that, but does Will DeCotiis think that? Because Iuorio does.
Yeah, I think so. Yeah, I mean, I think it's going to be a part of every industry. I personally think that like the revenue projections don't match the capital expenditures. I think they're probably off by like a considerable amount. And I think it's kind of, like I was mentioning before, it's too much capital expenditure too fast. You kind of logically think of like why, and just folks would rather just own the category and hope for the best. Personally, I don't think that's like the best investment thesis. Candidly, I think perhaps the market's a little over its skis from that perspective, but you can kind of understand why. And it also you were mentioning CIA before. I mean, it presents a national security issue as well. It's also can be just like a political or global economic issues. Like if you're the country that owns AI or is the best in class AI, perhaps that gives you an advantage on the world stage. Perhaps that gives you a military advantage. And so there's a lot of considerations other than simply like, is the investment, are you going to make money on this? I think sometimes some decisions are being made without money in mind.
Bobby, and I want you to ask the next question, but I want to know, because what I've been so keenly focused on for a while is that I understand that AMD and NVIDIA and Micron and all those were the tier one AI plays. Now it's time to figure out where it fits in. If it's really shaking the ground that we're standing on, what next? And energy was my next derivative with nuclear, with NLR and UEC. Bobby, what are we missing? Where's the investment thesis there?
Well, unfortunately, I still think it is in the investment thesis we should be talking about is AI.
Yeah. So just the companies that are making the chips and are making that shit?
Well, actually, I'm going to go to Will with that, because like some of the, back to Tim's question about OpenAI, and Luis, if you could put his next comment up there. A lot of the largest commitments that OpenAI has are circular with NVIDIA and with Oracle. For example, NVIDIA may give chips in exchange for OpenAI services, right? They don't have to necessarily pay for a lot of them, right? And again, as you both said, people are throwing money at them. So I think there's a worry about that, or less of a worry about that. But Tim says a very smart investor featured in The Big Short told the audience at Grants last week that OpenAI is the Netscape of 1990s. Maybe, but also maybe not.
Well, is that a good thing or a bad thing, though? I don't even understand.
Netscape didn't end very well, but from a perspective of what that means to me, they could be MySpace or they could be Facebook. Is I think it's a more accurate example than Netscape is, because Netscape still sort of exists in some form, but I just don't think because a smart investor said it at a conference that it's necessarily fact, right? There's a lot going on behind the scenes that we don't know. And I put this on the three of us as well. One of the things I like so much about Jim and I've liked about you, Will, we have our opinions, but we don't think by any stretch of the fucking imagination that it's a guaranteed thing that's going to happen.
Amen.
You know, I just, my wife was asking me today, we have a lot of physical gold, like too much, right? And my wife said, should we dump it all and buy it back when it drops? I go, I think it's going to drop, but I may not be right. You know, I'm only right about 92% of the time. So this could be one of the time. I'm kidding. It's not that much. But you know, it's like I don't think we should look at these things and say that has to drop. The first time I traded for myself, okay, was in the late 90s, and I lost near 6 figures in less than 9 months because I was right.
Just wrong on timing.
Here's the clue. I was wrong, right? But I thought I was right. So I just always want to tell people that watch us, like, we're not as arrogant as we come across about this stuff at all. At all. But Will, where do you go with this? Like, to answer Jimmy's question, what do you think? Are we looking at the chip companies now, the AI companies, the infrastructure around them? What's your investment thesis on AI?
Yeah, I think so. From my perspective, I don't think there's a lot of pricing power in the frontier models. I think that's mostly.
What are the frontier models? I'm sorry, Will.
The frontier models would be the guys who are doing the training. So it'd be like OpenAI, Grok, folks who are training on. You have a big training set, and they're creating a model that's performing in a certain tier. Yeah, and so I don't think there's a lot of pricing power in that. I don't think like the consumer is willing to pay for that. It's similar almost to Google in a sense that like you're not really willing to pay for a search. You just want to be able to search. It's a utility to you, and so I don't think they have pricing power in that sense. But I think the folks who do make money is, you know, I think you make money in chips. You know, you need to run the thing, and so I think there's money at that layer. I think there's also money at the application layer. And so what I mean by that is what the frontier models ultimately are doing. And I think that's what the frontier model companies are betting on, is that, you know, if you're used to using a certain model, you'll probably use the various products that come from that model or are based on that model. And so I think that's really where they expect to make money or make back kind of the operating losses. And then also in hardware, I mean, I think some of these companies are looking at, you know, making new hardware or hardware that's more suited to AI, and same kind of deal there. I mean, that's something that will have presumably will have a better gross margin than the operating model itself. So it's almost like if you think of Microsoft back in I was just gonna say like Microsoft back in the 2000s, where, you know, the operating system is one product and kind of the computer and everything else is another. Whereas like Apple took a different approach, and it's like the Apple computer is its operating system, the computer itself, the whole ecosystem. I think there's different schools of thought sort of emerging about where the money actually is.
But what specifically, do you have specific names that you're focusing on? Can you share those or specific sectors?
Yeah, I mean, I prefer not to share specific names, but I think generally speaking, yes. I think like if you think of, I think what helps in AI is if you think of it as being segments instead of just like AI generally as like some big amorphous blob. I think if you think of it as like there's the main model companies, there's folks who sell applications that use the main models or use their own trained models. And then there's folks who basically provide the infrastructure or provide the computing power or provide the energy to run these models. I think there's sort of like 3 or 4 different segments, like basically like horizontal layers in the market, and they each kind of have a different investment thesis.
Can we take a quick time out here? Luis, will you run the banner? Every week when we do this show, I talk about this. Tradier is offering 3 months free to people who are watching this show of Tradier Pro. We talk to options traders who have been doing it for decades and some who just begun. All of them share the same sentiment, and that's the Tradier Pro is one of the best options systems out there. So please give it a try. 3 months free, no obligation. Just scan that QR code and do it for us as a favor. We greatly appreciate it. And now back to the show, Bobby.
Yeah, I want to go to a question from Remo, our friend at Stock Charts, that I missed earlier, and I think we sort of touched on it. But he said, how is AI similar or different than the 1999-2000 .com bubble? I know Tim thinks this a little bit too, Tim McLean. Who also, by the way, Jimmy has lost quite a bit of weight on carnivore, so you should know that too.
Fantastic. Timmy, are you doing cold too? Too cold.
I don't know if he's doing cold. I know you've probably hit him up for it when you're going to see him in New Orleans.
I'm going to see him in New Orleans. I'm looking forward to it.
For anybody who's going to be in New Orleans, Jimmy's speaking at the New Orleans Investment Conference for about the 15th year in a row in New Orleans. Anyway, to this question, how similar or different than the 1999-2000 .com bubble is the AI rally? Let's not call it a bubble yet. I've said my thoughts on that. Will, at the risk of repeating yourself, what do you see in terms of similarities and differences?
Yeah, I think it's similar in the sense that I think it is like internet level infrastructure change, internet level change in kind of the way the market operates. I think similar to the .com bubble, I think a lot of the future growth has been compressed or projected into a very small time frame when it's actually going to take longer. And that when you actually you see this kind of as an owner operators, when you get into the details, you realize there's more left to be done than folks seem to think. So folks have, I sort of joking about like AI doomerism. And it's like, it's going to become super intelligent and kill us all. And it's like, the folks who say that tend to know like relatively little about the actual underlying technology. It's like, there's a correlation there between like AI doomerism and just like projecting things to infinity, and how much you're actually working in it day to day. And so I think it's similar to the internet in that sense. I think just like the internet was, like I'm sure there are many companies that will survive, and even if it is a bubble, it'll go up and down, but they'll continue to grow over time. I think there are a lot of pretenders in the market that are just not going to make it, that have funded on like short-term thesis or just have a product that's really like a short-term thesis, and they perhaps will not be around or have a lot of longevity. So
Bobby,
I think
that too.
I think it's very similar.
Bobby, can I throw in an answer as well?
Yeah, please.
I believe sometime within the next year and a half, and I want you to tell me if I'm crazy, Bobby, there is going to be a 30% haircut in the AI names, and it has nothing to do with the fundamental thesis. The fundamental thesis is as sound as hell. I believe that AI, I've already said that I think we're underestimating the impact that AI is going to have over the next 15 years, underestimating it. But I do think people get ahead of their skis. The events this week leads me to believe that we are in some process of inflating a bubble. When that bubble ends, who the hell knows? There's no value in saying we're inflating a bubble because it can go on for years. Would you take the other side of that bet, Bobby, or no, that sometime in the next 18 months, 30% haircut in AI?
No, I look at it like the Mag 7, right? There was a big haircut in Mag 7. There's an ETF, right? MAGS.
Yeah. And
you can just look at the chart at MAGS, which is Roundhill's Mag 7 ETF. Tesla was getting hammered at one point. And the Mag 7 stocks as a whole were doing okay. If you were to use them, if you were to look at that ETF, for example. Same thing happened when NVIDIA fell. I don't want to say crashed, but when it fell, I'm going to look at the chart on my side here on my other screen.
I don't know how much it fell too. It fell quite a bit, I think.
Yeah. No, it definitely. I mean, it had a pullback. It had a pullback for from about July to about September of 9.78%. And that's not high to low. That's high close to low close. So I think, the haircut on AI is going to be there because, again, here's one of the similarities to Remo's question. There's going to be a lot of companies just say we use AI now, and they don't. It replaces maybe a human resources person and, maybe a couple of, I don't know, do we have secretaries anymore? A couple of customer service people, right? But not a negligible bump in net profit for a company and reportable net profit. So their stocks maybe are rallying because we started to implement AI. There's going to be some companies that say we've started to implement AI and they're actually losing versus their spend. I had a friend who just left the banking industry recently in New York, and he said that's what's happening in most banks is they're implementing AI, but they're spending more than they're saving at this stage. So you'll get those haircuts, but it won't be an indictment of the whole AI system any more than the .com bubble bursting was an indictment of the internet usage.
Right. Or an indictment of Apple and Amazon and Google specifically that got thrown out with the bathwater. But I will say something to Remo too, is that one thing was very, very specific to 2001 and then again to 2007-8. And that was the amount of just speculative leverage that people were leveraging up and buying all these things. It happened in tech as well. People would brag about it. How they got 3 times leverage in my brokerage account, and I spent it buying whatever the tech stock of the day was, No, Qualcomm. And in the real estate bubble, the same exact thing. Everybody was a house flipper, and it went on for years before it unwound. And by the way, the unwinding in stock market now is just a press of a button. It's going to be a 30% haircut in my opinion, but it's going to be about a week-long event, maybe a 2-week long event, and then it's going to offer some good value. Any thoughts on that, Will?
Yeah, I mean, I think of, one of the big differences between the dot-com bubble and now is that a lot of these companies exist in the private market instead of in the public market. And so it's a little bit of a different environment. And so, we're talking about leverage. Are these companies really leveraged? You might look at like certain companies and say like, no, they're just like venture capitalist funded. And, that is a source of leverage inevitably. And that has a source of funds because the VCs are getting money from, their institutional capital. And so for those institutional capital players, that VC sort of it's a kicker, or it is in some ways a source of leverage, because generally otherwise their investments are a little bit less speculative or less risky. But yeah, I mean, from my perspective, I think of the leverage as being in a different place. I think of, to the extent there's excess leverage, I think of it more in like the private credit space or in certain areas of the private market. And so, to get to kind of logic where you're worried about that, I think the way you think of it is really in terms of if the entire economy if there's no growth in the economy other than AI, and AI slows down because it's been over projected, or really all the most of the growth at least is not really revenue or demand based, it's really investment expenditure. If the economy slows down and that slows down the economy as a whole, then you start worrying about leverage, but just not in the same space. Perhaps it's not in AI, perhaps it's actually in other areas of the market, private credit areas of the market, or securitized areas of the market that you start to.
But Bobby,
in terms of if there's excess leverage.
In some ways, we've already identified that most of the GDP growth, and this is a fact, we're not making this up, is spend on AI. And a lot of people, smart people, say it's inelastic. Doesn't matter if the economy starts to slow down, they still have to spend, but it does matter if they run out of things to spend. That could be a big deal. But Bobby, aren't we already in that situation where AI is kind of the only game in town other than liquidity? Or is there another investment thesis out there that I'm missing?
No, I mean, I think commodities is still an investment thesis. I do. I mean, I'm a big believer in metals, especially the metals that facilitate the electricity needed for AI and subsequently quantum computing after that. So I think that's a thesis, but it still sort of, in a way, goes along with it, because obviously we have a sort of a depression of the green movement at this point, and electricity is still predicted to be in shortage. I heard an interesting conversation the other day that electricity is not going to be in shortage at all, that the grid wasn't built for peak usage, and there's actually still quite a bit of room in it. Somebody said that help me out, Will, what's the machine needed for AI? It's not your processor?
Oh, GPUs, yeah.
Okay, one GPU is the equivalent of one home, and they're predicting about 10 million GPUs that are going to be in effect in the next 10 years. And 10 million homes could easily be absorbed by the current grid. But I don't know if we reach peak electricity usage, don't you have to kind of build for when we get higher than that? I mean, I don't know. That to me is still a good thesis to look at. I got a couple more. Go ahead, Will.
I was just to that quickly. I would just add that you can always overspend your demand. It's just like kind of an immutable rule of life. And so to the extent you do, that does cause pullbacks, corrections, and the like. So, I mean, you can over calculate what you think your demand's going to be and then just not get it.
Yeah. The one thing I want
to put up if I could, Jimmy, I want to put up a comment by Widge, because we haven't heard from Widge yet today. And I thought it was very, very strange that we hadn't. I thought he was mad at us. Widge says, I'm not a believer and have no desire to convert, but appreciate the good faith dialogue. And Jim, I think the leverage is much worse now, except now it's systematic.
Systemic. Yeah, that's
systemic. I'm sorry, systemic.
Yeah, that is
potato.
So here's what I would say to that, Widge, is that all leverage isn't created equal in my mind. I'm talking about strictly mom and pop leverage. I mean, when Schiller won the Nobel Prize on defining what a bubble is, and when I was interviewing him, I said to him this same question: doesn't it mean, there's one thing for a hedge fund to have leverage, a hedge fund, or VCs or big companies, but if it's mom and pop, people that can't make their margin calls, then that becomes a much, much bigger deal. And he said, oh, perhaps I should have put that in it. So that's one thing. The only way I'd push back on that, Widge, is I think it's the quality of leverage, not the quantity of leverage, that sometimes matters in this, if that makes any sense. So, Bobby?
Yeah, Will, I want to ask you this one from Tim. Is there going to be one AI model that becomes a winner like Google in search? He corrected himself. It's not lift Google. It's like Google.
Yep. Yeah. I would just flip back to the prior question. I would just add to that about leverage. So it depends a lot. If you think of like 2009, it depends where the leverage is. And so, 2009, like you can have a lot of leverage. You can even have moms and pops that are leverage. But if your like funding market locks up, so if your interbank lending locks up, that's actually when you get a problem where it's systemic and the government comes and steps.
That's a great point. Yeah.
Yeah. And so it really
Which
depends.
Be right then in that respect. Yeah.
Yeah. And so it depends where the leverage backs up into. So it can come from different sources. Like just because it was in mom and pop and perhaps now it's in corporate, if there's enough market disruption that it backs up into someone who's just systemically important, it could be an issue. But yeah, as to the models, so, it's my thesis to actually no. I don't think there's going to be one model to rule them all personally. I think the models actually lend themselves towards ultimately towards specialization. And I think you see that sometimes now. So the way there would be kind of one model to rule them all is if it just eats all the data. And so the idea is like you scale it as to all the world's data and it just becomes smarter than everyone. And it's like the one everyone uses. And then we all use that model and data comes out of that model and the data that it produces is also accurate. And then whatever data it produces that's accurate goes back into the model for more training. It just becomes this cycle until the model is trained so well, it's the smartest thing. And we all just use the super brain. I think it's basically the way folks are thinking of it. I think in reality that knowledge doesn't really work that way. You think of like the idea of like outliers and like a lot of the most innovative thought comes from like an outlier. You even think of OpenAI itself. It's like, that was the company no one expected pretty much. It's like you have Google who has a ton of money. You have some other companies working at it who are well-funded. You have this little nonprofit that's kind of like chugging along and then it explodes, And so I think perhaps we discount how much the outlier actually moves society, but generally economics too, just forward. And so I think to some extent, the AI companies themselves haven't really considered that, the big AI companies at least. And I think that comes out in domains, so I think, if you put a legal contract into Grok and you put a legal contract into a legal based or a legal trained AI, the response you get won't be the same really. They'll be different, especially if there's certain data that's like personalized to you or there's certain data that's personalized to contracts you used in the past. And so the idea of just like
make your pitch for your company right here. Don't be shy at all. What you're saying is that your company.
I mean,
say it. Yeah.
Naturally, I'm talking my book a little bit too.
No, we want you to talk your book, particularly if you're proud of it. Yeah.
So it's my investment thesis matches, I suppose, our product thesis. But essentially, there's a thought process in the market, just like aggregate data. If you aggregate all the world's data, it'll know everything. So it'll be the smartest thing possible. I think in reality, there's these kind of like niches and there's areas where you don't necessarily need all data to be smart. A specific area, perhaps an outlier connection or some connections that are specific to you are actually more valuable. And so in those areas, you actually don't need a ton of data. You actually need kind of a smaller subset of data to be good.
Okay. Am I crazy or not? We keep talking about this and it keeps coming to two things in my head: Google with Gemini or Twitter with Grok. They're the ones that seem to have access to better data. Facebook can't do that unless you want pictures of what someone had for dinner. That's not where the data is not coming out on Facebook. To me, it seems like those two will end up being leaders, not winners. I agree with you on the specialization part of it, but aren't we saying that those two things have a leg up on everybody and are winning the race right now, or could be winning the race?
I think so in some sense, in the sense of, what kind of output are you talking about? So, if the goal is to create an AI that creates images or creates influencers or creates video, perhaps Meta does actually have an advantage because most of their content or data is video or image. And so to the extent you're thinking of it that way, as to
for Will, that's a great answer.
Yeah, exactly. Yeah. As to like text data, you would say that. You'd probably say like Twitter data is like a world's conversation. It's like a public forum of the world. And so you're just getting a ton of data. on people speaking, and so that has certain value. You say to Google, just like it's a ranking algorithm of the whole internet, so there's obviously value there. And then you'd also have the issue of just because Meta happens to be in that lane, like because their biggest product line is Instagram now, say, doesn't mean they won't just train on the whole internet anyway. You know what I mean? So if you have the technical capacity and enough money and the right personnel, you can just kind of take a data set and train it. But yeah, I mean, for all else equal, yeah.
Well, you used to be in general markets more than just AI. So you have to be looking at this stuff and thinking to yourself, it's either some of the metrics of overvaluing, like the KPE, for example, the cyclically adjusted price to earning PE is at the highest it's been except for the dot-com bubble. All right. You have to look at this and say, there's still something behind this, or maybe it's a bit overdone and it needs to drop a little bit to feel more comfortable. Where do you stand in that? Just not independent of AI, but just in your total.
Yeah, I'm in the overdone camp. I think things are a little overcooked. And I think, I always encourage people not to rely on just like some person's statement to actually like do the math and think about it. And so, if you look at the price things are going for and what that price is based on, what kind of earnings they're producing and the like, what kind of growth rate, how sustainable you think that growth rate is, how certain that cash flow is really the way to think about any investment thesis. And you think to yourself, like, when will I get my money back, right? Will it be 1 year, 3 years, 5 years, 10 years? And so I think what kind of counterintuitively what happens is when people tend to think, when a market is new and you can get your money back in like 1 to 3 years, a lot of times it makes sense to dive in. I think a lot of times when everyone thinks something is the next best thing, the premium that you have to pay to get it extends out. And so sometimes people think like, we should get a return in 1 to 3 years, but it actually is more like 10, because just the premium has spread so far away from what that true growth rate is and what the actual earning potential is. So I view it as a little overcooked personally.
I want to put up Widge's follow-up comment in here because, he says people in governments are leveraging their assets to buy more assets. The issue of passive investing from people who can't afford rent or beef. I don't recall this in earlier episodes. I do. Being on the trading floor, Jimmy, you were there during the dot-com bubble, watching guys who, barely had gas to get to work in the morning, trading red hat in and out. I did see it back then. So, it's just your experiences, and there's other things I'm sure Widge has seen. Widge is a very smart guy that I didn't see. I did see that in the past when things were leveraged. And like Jimmy's description of people who had 3 and 4 houses they were flipping, but, they were hurrying up to flip one so that they could make their mortgage payment on the one that they lived in. That did exist. Now, maybe you're talking about something different, Widge, but I see that now. I see it now and I saw it then.
Please, we got a couple minutes left. Widge, drop a comment too. Are you then lightening up on all this shit, predicting that perhaps the bubble bursts relatively soon? Are you comfortable with me saying 30% haircut in 18 months? Or do you think it's far worse than that and far quicker? Because I am interested in this. And Bobby, then I'm going to ask you a question in the meantime, is that we all know that this is stretch. So what the hell do we do to protect ourselves? I keep saying that your bulls can make money, bears can make money, but pigs get slaughtered. You must be taking money off the table. I must be taking money off the table, and I have. What do you think, Bob?
Well, I'll give a quick answer to that. And I also want to throw this last comment out before we shut down for the day, Jimmy. So remind me, it's from Remo.
Sure.
But I think, something I did when I was trading actively, I used to keep $30,000 in my trading account. And if I ever reached 60, I took 30 out, right? I just ripped it and then started trading with 30 again. That was a way to kind of keep myself in the game and not go crazy. I think people should protect themselves when they feel uncomfortable, but they should never stop investing, in my view. But I'm not a financial planner, right? I mean, I have a larger life insurance policy now than I used to, right? Things like that. I don't look at my home as an investment. That's one of the ways I do it. I buy a home that I make sure I can afford almost regardless, right? And I don't.
I'm so glad you didn't say irregardless. Do you think people who say irregardless should be killed or just imprisoned for life?
I think they should spend more time on AI. Will, does irregardless come up in any of the contracts that Spectacles does?
It's a common thing lawyers do, actually. So I'll reserve comment. Irregardless comes up a lot. Yeah.
Irregardless. It's a wasted syllable. You don't, regardless and irregardless mean the same damn thing. It makes my blood boil. Also, decimate doesn't mean the same as devastate. Decimate means to reduce by 1/10. It's from old Roman guard. People use it. Bill O'Reilly, I was reading his book. He uses it like it means devastate. Learn the language, people. Whew. Okay.
Can I throw in Remo's last question here for Will before we run out of time? Because I want Will to get in as deep on this as he wants to. Remo says, Will's top 3 stocks or sector picks for the next 5 years. You are not held to these, and past performance is not indicative of future results.
But he already said he didn't want to give individual names, but the sectors that think I will be interested in that part.
Yeah.
Yeah.
Yeah. So I don't want to give any individual names. What I would say about the industry generally is that it actually goes to kind of 2 questions ago, which is that, there's a lot of inflation now, and rates have obviously been raised to try to combat that inflation. And so that changes the environment, I think, significantly for some more speculative companies. And so I think a VC like that, VC really hasn't experienced a rising interest rate environment. And so that puts a lot of pressure. And if you recall back a few years before the AI boom, that was starting to put a lot of pressure on VC and some more speculative names. And then when the AI technology came out, that kind of all fell by the wayside. I personally don't really feel that that's been completely resolved. I think there's still interest rate and inflation pressures that kind of haven't finished working their way through. And so I think that's something that should be considered. I think, in the VC space and some other speculative spaces, private credit and others, there's kind of a push, and perhaps there's still excess liquidity now, but there's been a push because there's just there for a long time, there's nowhere else to go. You need to return. And now you have kind of a more competitive environment in terms of competition for return when you have a higher interest rate. And so you get, I see that, I view that in like housing, for instance, where, a lot of people, the market sort of frozen and you see it come down in certain areas and the like. And so, and I think that's
Bobby, I'm going to ask you something, Bobby, before let me shoot in. If you had to look at the commodity space that we've been thumping the drum for 5 years, the commodity space, particularly as it relates to metals and against the Mag 7 stocks, Bobby, what do you want for the next 5 years?
Oh, I think I want copper. I do. And I'll tell you, Timmy reached out to me recently and said he sort of has a new belief in copper. Actually, Timmy, if I'm not quoting you right, please correct me in the comments. I really like the copper story now that it's kind of lost its whole tariff bid, and it's more about the fundamentals of whether copper is going to be needed or not. So I like the industrial metals going forward, but it may be a little bit of a rough ride. I probably will shift some gold out of copper, but I'm not, or into copper, but I'm not going to buy physical copper like I did gold. I'm not going to sit there with much copper wire in my house.
I want to give Bobby a big pat on the back, because one of the theses he always says is, you guys know I've been beating the copper drum for 5-6 years. And you also know how I was representing that thesis was not in the metal itself. It was in that big company out of Arizona that mines a crap ton of copper. Yeah. Well, guess what happened? The other day I see copper up 15% and I'm thinking, shit, I'm in the chips. And I look, it was because mines were having problems, and it was the company that I owned, which was down 10% in the same day. So Bobby always says, if you want to be long copper, be long copper. I deviated from that sound advice and I wore it on the ass. That's not an expression.
I want to throw in one more quick question, Jimmy. I want to throw one more question into Will, and then
we got to be done. Yeah.
Please pitch spectacles again, because this has something to do with that. Jimmy has always said, and I adopted it from him, that AI is not going to remove plumbers' jobs. It's not going to remove electricians' jobs, barbers, for example. We're going to be talking about lawyers, investment bankers losing their jobs. Do spectacles kind of take away some of the work from lawyers? You're probably working with lawyers to put it together, right?
Yeah, no. So I think of it as pushing work up the knowledge chain. And so there are simple tasks there's simple tasks that I think AI handles very well. Retrieving things from contracts, retrieving former precedents. I think AI is well suited for that. It makes the work faster, more efficient, much better. I think decision-making is still not suited yet for AI. I think it's something that AI companies are going to work on, though. I think, agentic AI is probably the future. And I think AI that can make decisions is sort of where folks are aligning or starting to focus. As far as plumbers, I know that's been an argument, as folks have said, pick a trade because AI won't affect that. I think sometimes that's just because the AI currently is software based, doesn't mean you can't stick it in hardware. So the obvious, response to that is just like robotics. AI has certain implications for robotics, where the robots can get just much more efficient at doing various tasks. And so, you have a Roomba now and it vacuums pretty good. There's a world where you can develop a robot that can do your plumbing too. So, yeah,
that's going to ruin Penthouse Forum. Is this still a thing, Penthouse Forum? I'm sorry, Jimmy.
We got to end it on that.
Maybe not if the AI is generating the books too. Who knows?
Thank you. There you go.
The magazine.
No doubt about it. All right, we are going to cut it off now. Will DeCotiis, he's on Twitter at Will DeCotiis. Is that it?
Yep. It's my name. And then, you can check us out at spectaclesxai.com. You can also catch me on LinkedIn. I'm there too. So, feel free to pop into a DM or send a comment. I'm happy to talk to folks.
Perfect. Thank you guys for joining us. As I've said a million times, and I'm not lying, this is my favorite show to do because I love the participation from you guys, particularly guys who are smart as the people who comment on this show. Thank you guys for so much the support. This has been The Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. That's Will DeCotiis. Thanks for being here.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.